What's up everyone, it's Karthik with MoneyVest. So in this video we are going to be talking about Tesla stock. I'm wearing red in celebration of Tesla here in this video. Make sure that you drop a like and subscribe to the channel, and also do check out our Patreon link down below. We've got about a week left for that 16% annual discount that does expire at the end of this month. So if you want to take advantage of all the trade alerts, all the trade ideas, our Discord channels with over 18 private channels here, including our website, our MoneyVest platform, then again, link's going to be down below. We'd love to have you on board. So first things first, let's talk a little bit about Tesla's cost basis and the overall position distribution. We did see a lot of buyers stepping in on 8/23. So this right here, August 23rd, we had over $847 million of net inflows into Tesla. Very, very significant. I was up over 4.5%. Back over $220, and right now the average cost basis is sitting exactly where the price is, almost exactly where the price is at $219. We do still have a lot of traders, a lot of investors that are still in the red for Tesla, with about 48% of these shares currently profitable right now. So well over 50% at the moment are still down on Tesla as a position. So comment down below if you are currently up or down in Tesla, if you actually own a Tesla stock. So let us know in the comment section down below whether you're in the green or if you're in the red, so where you belong to, whether you're in this camp or in this camp. Either way, I'm here to make a case for why it is time for Tesla's explosion to begin to the upside. Why? Because there was a pretty big catalyst on 8/23, so August 23rd. In case you missed it, we had the Jackson Hole Economic Symposium with Jerome Powell very confidently indicating that interest rate cuts are coming, and that is actually good for companies like Tesla, because this right here is what we're going to discuss in today's video. This is the interest rates on 60-month new car loans in the United States from February 2014 to July 2024. You'll notice that for the longest time, interest rates on auto loans were hovering around 4 to as much as 5%. They never really breached 5% for a very long time. And then in 2018, they actually came down from just under 5% to their lowest point of 3.88%. So, and I know there were other factors, there were significantly other factors to why Tesla rallied the way it did between that time period. And then it's not a coincidence. It's actually not a coincidence why Tesla has not gone anywhere since November 2021. So actually it's been well over 3 years that Tesla has literally not gone anywhere. And I'm going to make this correlation here in just a minute. I've also got a Venn diagram to share with all of you, and why I believe there's 3 things that need to happen precisely in order for Tesla to explode higher to maybe all-time highs here. But this right here is the timeline that we're talking. My trading view is lagging a little bit, but this right here, if you come down, take a look, the date. I want you to really pay attention to the date here, November 2021, and that's really the time when interest rates on auto loans kind of bottomed out, right? November 2021 at 3.88%. Since then, just take a look, 4, 4.5, 4.9, well over 5, 6, getting up to over 6.5, over 7, and now we are sitting at well over 7.9. At one point, we were well over 8% by some estimates, and right now we're at 7.89% for auto loans in July of 2024. So in that entire time period, as interest rates have gone up, as the Federal Reserve have continued to embark on this huge journey of quantitative tightening, Tesla stock obviously has not done anything. And if you compare this with the auto loan, the chart that I just showed you, what you'll notice is a very interesting correlation between these two things. So what you'll notice is that as interest rates were coming down over here from well over 6% down to as low as 2.7%. So this might be for 48 months, but this right here is the entire sell-off. That's the orange line that I want you guys to focus. Tesla stock ended up rallying over 882%. Then the interest rates somewhat stabilized over here. In fact, even started increasing, as you can see over here, topped out at well over 5% once again. Tesla stock didn't really do anything for 6 years. 6 years, Tesla was trading sideways. Well, then from its highs of 5.3, again, this is back in 2018. So this is the level that we're talking here. So back in November, December of 2018, all the way till November 2021. What happened? Tesla rallied over 2,900%. So this right here was the entire rally for Tesla as auto loans, as interest rates on these auto loans continue to come down. And then, of course, if you take a look and what's happened in the last 3 years. So this right here is another area of consolidation for the last 3 years for Tesla as interest rates have gone up. And that's been very, very precise. I mean, if you take a look at this bottom right here for interest rates, that's been the top for Tesla stock very precisely. And over the last 3 years, as we've embarked on this entire journey of quantitative tightening, Tesla's gone sideways. So if you are expecting for interest rates to maybe come down again, as we have experienced in the past, right? So this right here was a time when interest rates were coming down. And what happened with Tesla, of course, was a huge rally. If you come back a little bit further, once again, you'll notice that Tesla stock rallied during this time of interest rates coming down. Of course, consolidating sideways a little bit and then started really ripping higher and then consolidating sideways. Well, it's not unlikely for us to expect that if interest rates indeed come down here again, right? So as the Federal Reserve is kind of indicating us, there is a possibility for yet another breakout after 3 to 4 years of consolidating sideways. Now, I'm not saying there weren't other factors. Of course, execution is really important and the adoption for electric vehicles is equally important. So there's a lot of factors that need to play out in order for Tesla to once again justify being, priced such an expensive stock compared to some of the other auto manufacturers, as well as the adoption for electric vehicles. And Bank of America released a new paper suggesting for lack of affordability in electric vehicles being the widespread reason why US adoption rates are falling, or at least not going to increase until 2028. So they mentioned that EV demand growth has slowed down sharply in 2024, likely due in part to affordability. And EVs in the US are priced at less than $37,000. So only 3% of them are priced less than $37,000, according to research. And BofA's analysis is based on the assumption that most US consumers will buy an electric vehicle if the price is competitive with ICE vehicles. And this means that OEMs have little incentive to ramp EV production, despite what might be higher levels of demand at lower prices. As such, we expect EV penetration to inch higher from 2024 to 2027, but after 2027, it could start to accelerate once again. Reading further, they mentioned that the EV penetration rate has averaged about 6.8% this year, which is slightly down from the 7.5% in 2023. And they also mentioned that they now expect EVs to make up about 8% of the vehicle sales in 2024, 14% in 2027, and 29%, so almost a third of vehicle sales in the US by 2030. And earlier this year, they were expecting slightly higher rates. They were expecting about 10% in 2024, 18% in 2027, and 33% in 2030. So the trajectory of EV adoption has been pushed back a year or more. So the Venn diagram that I've got for you, which I believe is going to lead to a more, significant potential for Tesla long term, is these three things. Now, of course, there's other factors. You can add more things that are more geared towards Tesla in itself, like FSD, full self-driving, robotics, energy, not to mention robotaxis, and then of course execution from Tesla's management. So those are some of the other reasons, but this, I believe, is now the tailwind for Tesla, which I think is going to be very, very important. So number one, lower interest rates. We already have seen the correlation between auto loans and the rates on auto loans versus Tesla stock and how it's actually done. The second is going to be lower priced vehicles, right? So Tesla, as we already know, is potentially working on a vehicle that can cost anywhere from $20,000 to $25,000. So lower priced model for Tesla is going to be a huge game changer. I mean, it's practically over if you've got a Tesla which is at $25,000, even as low as $30,000, and interest rates are also lower. I mean, that at that point, it is quite literally game over for all other electric vehicle manufacturers and even ICE vehicles in general. And then increasing gas prices or staying, stable and higher. Because if gas prices are high, interest rates are now lower, and there's also a lower priced vehicle. So this right here in itself is a double win for Tesla, because not only are people able to buy cheaper vehicles, they're also able to finance them at cheaper rates. But then also you've got increasing gas prices, which makes that comparison of gas savings even better, right? When they are starting to market Tesla vehicles. So that right there is kind of like a Venn diagram that I wanted to break down. Of course, like I said, there's one more thing that you can include here, potentially suggesting for Tesla's FSD. You can also include for robotaxis here. You can include for robotics over here. So the humanoid robot, Optimus, you can also include for, supercomputer. There's a lot of different growth levers that Tesla can obviously pull on long term in terms of its growth, but those are not materialized, right? So those are not things that we're generating revenue from just yet. If they're able to generate that revenue, if that revenue composition starts to break out to some of the other businesses and verticals that Tesla is doing, then yes, we can make a very strong case that Tesla now, trades at this valuation, which can be deemed somewhat fair or undervalued. But until that starts to materialize, in my view, in my eyes, as I already mentioned, that it is a company that is an electric vehicle company with a very, very strong positioning with the technology as well. So that's where I stand, and I think everything else is a little bit of a cherry on top for Tesla for me. So this right here is the rates for commercial banks, new auto loans for 48 months, so 4 years. And again, you can see the significant increase that we have witnessed. And this for 48 months was trading well over 8.6%. For 60 months, it was trading just a little bit over 8%. And now we're starting to come down as the Federal Reserve Chairman Jerome Powell has finally confirmed, or indicated at least, that they are going to start changing the path of monetary policy. And this is just to give you a little bit of an example of how significant those cost savings can be if you're financing a vehicle at 8.5% for $45,000 versus, of course, $25,000 at 6%. So not only a cheaper vehicle, but also at lower interest rates. And that ends up being a significant difference in the monthly payment from $387 to as much as $739, right? So that's well over almost twice as much between those two categories. So this really, of course, is an analysis based on what is yet to come, which is potentially lower interest rates in auto loans, as well as Tesla's cheaper vehicle, so faster electric vehicle adoption, and as well as that better comparison with the ICE vehicles, so adoption rate to accelerate, and then of course not to mention all the other aspects of Tesla's business. So coming over to the technical analysis, which I think is going to be a lot more important for all of you, and I'm going to be doing a video on Palantir as well, but this right here is where we are. We're still well within a context of a downtrend. As I've already mentioned, Tesla does have a lot of resistance for its overall technical. So we got a resistance sitting at 235 to as much as $270 a share. So I want to be very clear that we're still well within the context of a little bit of a downtrend. So this right here, of course, the all-time high, coming down, pushing higher, coming down, pushing higher. A little bit of an overblown move here, pushing up, coming down, pushing up again. A little bit of that downtrending channel here, and then selling off down to this lower low, pushing higher to this lower high, and then selling off down to this support again. So this right here has been the overall trend within which Tesla's been trading. And you'll notice that there's a lot of supply sitting for us roughly in the 260s. So the first red rectangle over here is a huge area of supply that Tesla needs to break out of in order for us to see some potential higher highs here. So the trend is very much still bearish. We're still well within the context of a bit of a downtrend, so it's still weak. But it's also been consolidating for well over 3 years, and Tesla has gone through these periods of consolidation for a very long time before finally breaking out to new all-time highs. So if I remove for all of this and simply show you some of the areas of consolidation, and of course yellow for Tesla, let's just go back a little bit, and this right here is what that looks like, where Tesla in the past, again, has consolidated for many, many years, in some cases 2 to as much as 6 years, before finally breaking out to new all-time highs. And those rallies have, of course, been very, very strong for Tesla. And again, you go back and you take a look at how interest rates were doing at that time. During times of high interest rates, Tesla's consolidated sideways. And as interest rates have continued to come down, we've seen those explosions, but there were other factors as well. So just don't want to give a sense of that interest rates were the only reason. Of course not. Tesla has grown as a business during that time. So if you come over to our fundamental analysis here and take a look at the last 8 quarters, or let's just go back to 12 quarters, this right here, very nice consistent revenues, profitability still there, although margins been coming down because of the price cuts that we experienced last year and a little bit earlier this year. And then if you come over to analyst estimates, we got a hold rating with a very, very significant differential between the lowest price target of $25 and a high target of $325. I think Dan Ives has got a bullish target of well over $300 on Tesla, with the growth expectations for Tesla well over 11-12% for the long term for the company as well. So that's where we are. Again, expectations for $4.30 to grow over to well over $14 over the long term. And as EV penetration grows, as interest rates come down, and there's going to be more potential affordable vehicle here for Tesla with all the other growth incentives that Tesla's working on with robotaxis, full self-driving, energy, robotics. This could be a time period where we can look back and sort of see there's a lot of accumulation happening with a huge breakout past that 260 to as much as $300 level. So the idea would be resistance at 233. Going into next week, all the way to 267, huge area of supply and resistance here. And then, of course, a breakout above that is going to put us on the map to getting well over $380 to as much as $400 a share for Tesla moving forward. So let me know your thoughts down in the comment section below. What are your thoughts? As always, if you enjoyed this video, found it helpful, make sure that you drop a like and subscribe to the channel. 16% annual discount available for our Patreon until the end of this month. And as always, happy investing. I'll see you all in the next video.